Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to do a quick walkthrough of what happened this week. Take a look at all four of the major index ETFs, then take a look at a couple of key sectors, some indicators, and a snapshot of the Mag 7. Okay, so here's the ETF dashboard. When you look at the Dow Diamonds, the SPY, the Qs, IWM, everything was very negative, as we all know. The leader to the downside was the Qs, down almost 10%, 9.9%. And, you had a couple others very close. Russell 2000, very negative. It is the worst performer on the year. Everything is negative on the year. When we look at the 16 sectors I track on a weekly basis, I haven't seen this in a long time. Not a single sector was positive, and now year to date, every single one is in the red, okay? Every single one. And the two worst performers this last week, energy and semiconductors, were identical in their percentage drop, down 14.8%. Pretty big move to the downside. We had some others that were double-digit drops in here too, financials, NASDAQ Biotech, and the worst performer on the year is semiconductors, down 25%. And the picture isn't any better. It just keeps breaking down. All right, let's take a look at the Dow Diamonds. Okay, the diamonds were down 22 points on Friday. Of course, the Dow Industrial is down 22.31. On the week, down 32.40. The Dow was down 32.69, so very close. All you got to do is multiply by 100 and you're very, very close. So when I look at this, I think we've got some potential support that could be coming in here, but that's going to be critical to see if it holds. 380, 376 to 380, this little 4-point range in here. These are lows from April and April, May, I guess. I thought it was August, but April, May. We actually closed below the August low with the close on Friday, on the end of the week here. So pretty negative picture. When I take a look at the Elliott wave picture, let me go to the weekly view first. Here's what I'm looking at. Looking at intermediate wave 3. Because I had a sideways minor 2 in here, I was looking for a sharp pullback in wave 4. That's what we're getting. Okay, so watching that support level I already talked about, looking at this as an ABC zigzag, the way it's acting, the way it's coming down, yeah, we're getting, pretty oversold right now, both on a weekly and daily basis. And you can see, here's the count on a daily basis. The thing I've got a little bit of doubts about is if we have an ABC, I'm not seeing 5 waves for the C wave, okay? It's possible this could be a WXY for a combined corrective of 2 corrective patterns. But if that's the case, we won't get another small wave in here and then we'll bottom. Okay, but right now I'm leaning into the fact that maybe we get a little chop, maybe we get a little bit of bounce off of this support level, and then we come down, finish off with a 5th wave. Let me bring this back over here. Let's take a look at the SPY. SPY was down 31.42, closing almost on the low of the day on Friday. Very, very negative picture. Down 50.38 on a weekly basis. And to me, the next level of support in here that I've identified is 494. So what is that? That's another 11 points down on the SPY. So we'll see if we're going to get that far. When we take a look at the Elliott wave picture, here's what I'm looking at. A little bit different Elliott wave count than what I have on the industrials, okay? And I've talked about this before. Okay, so I think that we have the 3rd intermediate wave finish complete, and I think we're into a 4th corrective wave. The bearish sentiment out of the option pits got extremely negative back over here at the end of wave 2. I don't know that it's going to get that negative, and it hasn't even come close to that kind of negativity yet at this point, and it may not with a sideways type of correction, which is what I'm looking for. Looking for a WXY is what I'm looking at. And so for the first wave, I think we have a flat going on based on the wave structure that's so far playing out. So now, again, same kind of thing I just talked about. We're looking at a C wave. I'm looking for 5 waves in here to finish. The critical thing I'm watching on this higher level, intermediate 4 cannot end in the territory of wave 1. If it's a triangle or if it's a big flat, it can bounce around, it could overlap, it just cannot end its pattern in the territory of wave 1. So we'll see what we get. I'm expecting this to bounce and gyrate around for several months. And with the chaos that's going on right now, that wouldn't surprise me whatsoever. All right, let's take a look at the Qs. Okay, the Qs were down 27.99 on Friday, and look at that, closing the low 423.05. I mean, we're just like, what, 40 cents, 38 cents off the low. And then on a weekly basis, down 46.27, pretty negative picture in here. And we're right at that August low, really, and maybe we closed below it, 423.45. Yeah, we closed just fractionally below the August 5th low that happened over there. Let's take a look at the Elliott wave picture, and here is what I have. So same kind of thing that I just talked about with the SPX or with the SPY. I'm looking at a 4th intermediate wave to chop sideways. Again, can't get the overlap on the close. I think we're coming down here in this C wave. I'm looking for 5 waves, and we may get a little bit more as we come down. We'll see what we get. We're definitely extremely oversold right now. We're much more oversold than anything we saw back here in 22. Okay, so that's the Qs. Let's take a look at IWM. Okay, and in case you're wondering, I'm going to be showing you one of the 4. I'll show you weekly and daily Elliott wave picture. I'll go into the daily picture once a week. The other 3, I'm just going to rotate through them. I'll talk about all 4 of them every week, but I'm not going to go into more detail on the Elliott wave picture. It just wouldn't be fair to my members. Okay, so here's the picture with IWM. Okay, down 846 on Friday. Now you can see we came back quite a bit versus what the other 3 did in terms of closing down near the low, and this kind of bounced back some. It was down 1926 on the week, but this is an extremely negative picture here on IWM. And here's what I want to look at. Let me go to the weekly view and show you what I'm doing. Because this thing could not hold a bullish scenario, I've moved to saying that we are in a much bigger bearish scenario going on. Okay, I think we're in a large flat, an ABC, and that we're in a C wave. And in a flat, when you have a C wave, it can become very, very negative. I think we're in the 5th wave of intermediate wave 1. I don't think it's finished yet. Okay, so that's what I'm watching for this to finish. And the absolute key level down here, which I expect to be broken at some point, but it may not happen until we get into the 3rd wave down, is all the way down here around 163. This low was established in 22. June of 22, October of 22, got tested in October of 23, pretty much held. It was a little bit below it, and then, for all intents and purposes, it kind of held that low, right? So pretty critical area down here. And we closed below that, and, I think more substantially than what we did here on the week of October 22nd of 23, then I think it's going to get very, very negative. And I'm expecting that to be in the 3rd wave. I'm not expecting that to happen in this 1st wave down right here, which we've already come quite far. Okay, so that's the picture on IWM. Let's take a look at a couple of sectors. I'm going to start off with XLE. Okay, XLE was down $7.98 on Friday. Big move down. 2 huge gaps in a row, just like on the indices, right? Down $13.67 on the week. Oil really got hit. Okay, so that along with the whole dynamics of what's going on at the market, not surprising to see what happened in here. Now, when I look at this, I go back and look at this area of support back over here that occurred in 23. And I put a dashed line across from that horizontal. I wouldn't be surprised at all to see some support come in here, 76 to 77 on XLE. And I think oil is getting down in a target I've got, and I'm talking about WTI, and we'll see how much further it's going to go. It got whacked pretty hard this last week. Okay, so that's XLE. I want to take a look now at SMH. Okay, SMH down $14.77. And again, this was the, right there with XLE in terms of these were the two biggest sectors, remember, from the dashboard, the two most negative of the week. Down 31.37 on the week. And you can see this big support level that was key, the August low, finally got a big break of it and a close below it. I want to show you, I'm going to go back and show you the comparison to the SOX index in a second. That's the picture there. When I take a look at the SMH versus SOX comparison, I've talked about this before. The SOX index broke below that August low several weeks ago, and then it closed below it in the week before last, and then this last week. So this was really kind of leading SMH to the downside. Kind of interesting comparison there. Okay, let's go back here. Now I want to take a look at a couple of our indicators. We're going to start off here with the VIX. And of course, everybody's been talking about this. Everybody, I'm sure you've seen this, the big move to the upside on the VIX. Here's the daily. Let me show you. I've got this band, and this band is where the highs in 22 had a tendency to get reversed. Okay, now we went way above it and for one day on August 5th, but here we are sitting well above it at 45.31 on the close. The interesting thing about that, when you look at the weekly picture, here you go. Here's that band. Here's 2022 highs. Okay, let's look back. And you go back to March of 25. This is the highest weekly close on the VIX since back over here in March of did I say March of 25? March of 2020, the COVID crash. Okay, so the highest weekly close. Now, if you look at it and say, well, this is on the way up, right? So on the way up, where did we close up in that kind of neighborhood? You had to get this week of March 8th. In here, and then you had 2 more weeks. Now, I'm not saying we're going to be identical, but it's really interesting that this time period is exactly 60 months. Okay, and you look for turns, you look for timing on, 30 weeks, 30 months, 60 weeks, 60 months, things like that. And here we are, 5 years after March of 2020. Okay, so that's the picture with the VIX. I want to take a look at the high lows on the New York and the NASDAQ. New York Stock Exchange, 1,017 more stocks hit 52-week lows than highs on the day. Only a few, looks like maybe 4 days in 22, this is the year right here, 22. Only 4 days were lower than that. You got to go back to March of 2020 after that. Okay, so pretty negative implication in terms of what's happening beneath the covers. The NASDAQ minus 1,423 on Friday. And again, just 3 days in 22 had lower readings. And then you go back to March of 2020 for several days having much lower. As you can see, the lowest reading was minus 2093, but we're getting pretty doggone negative here on these indicators. All right, I got one more I want to take a look at. The percent of stocks above their 50-day moving average in the S&P 500, 11.7%. Falling out of bed, just like the indices. We're down here very close to this 10 level, right? Okay, so scanning back, going back over here over the last several years, What's happened when we get down around that 10% level? Well, here's October of 23, and we got a little bit below 10%. We bounce up, we rally, come back down, retest, and then go. Silicon Valley Bank, little incident that happened in March of 23. We got close, didn't get down really as low as where we are now. And then you go back to 22, September, October 22, we got below it. Same kind of thing. We rally off after several closes below the 10% level. Right here, what was this date? It's not giving me the data on the arrow. Closed 10.5% on September 22nd of 22. Come down, bounce, come back, and then take off. So could get kind of interesting. Now I tell you, can it get worse? Yeah. Of course, we go back to March of 22. You see how long it stayed well below 10%. And this was the lowest reading at 0.99 on March 25th. So kind of interesting picture here. Keep an eye on this to see, do we get some kind of indication on turning to the upside? Okay, that's it for indicators. Let's take a quick look at the Mag 7, and here's what I want to do is just look at this picture. Here's all 7 of them, okay? Very, very negative in terms of the downtrend. With the moving averages are the 21, the 55, simple, okay? The only one that is not below the March low is Tesla, but it looks like, based on the way it acted on Friday, that it wouldn't surprise me if it takes out the March lows. Okay, that's it for today. If you felt like the video was helpful, give it a thumbs up and share the video. Everyone have a great week. We'll talk to you on the next video.